Yeah, good morning from Nigeria. How are you doing?
Fine, thank you.
Okay. So,
Still early in the morning in Nigeria.
okay. All right. So, your name is Helena, right?
Right.
Okay. All right. I saw the assignment you did on day one. It was very, very good. I love the way you did it. It shows you understood the method, right? Without us even doing the one Zoom, I saw that you saw through it, right? So, like I said, you're welcome to this morning training. So this is so today we are doing the day two training, which is the M15 part of it, right? Like I said, this is Btmm and ICT, the combination of Be the Market Maker by Steve Marrow and Inas Go Trader by Michael Hudson. And I've said in this method, we trade 3 time frame, right? Yeah, we 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 trade H4 mainly, and we anchor H4 on daily time frame demand and supply zone or daily time frame order block. Then we enter from M15. Now, the reason why I included before now, I didn't include daily time frame, but I saw that if we take breakouts on H4, sometimes when the trend is very strong, right, it affects the H4 time frame. So, and I've also observed that if I anchor the H4 breakout source on daily time frame demand and supply zone or other block uh, zone, right? It makes the H4 to be more stable. That was why I have to include the daily time frame to read. Previously, prior to this time, we trade H4 and we enter from M15. But now we anchor H4 on daily time frame demand and supply zone or other block. And after that inclusion, the method has become very, very stable, right? So like I said, today is going to be on M15, right? All right. So I'll share my screen now for us to, yeah, just to begin officially, right? Yeah, just a minute. Let me see. Okay. Can you see my screen?
Not yet.
Okay.
Oh yeah, sure.
All right. All right. So like I said, this is the,
What's this?
yeah.
One question before we start the M15.
Okay.
I have a question about the daily time frame.
Okay.
What if, sorry, as for time frame, what if the source and the breaker is
Not
uh what
if
do you call it?
if they are not
Eh,
on the daily time frame demand or supply zone or the other block.
no,
No. What?
the breaker should be like rally base rally, right?
No, no.
And the last
It shouldn't be that. It should just be on the daily time frame demand and supply zone. It's not, we're not using demand and supply zone base rally base or those stuff. We're not using it. We're just anchoring it there, nothing more. But the breaker and source is not demand and supply. It's different. It's
is not the
ICT.
demand and supply.
Yeah.
No, I mean, what if the breaker and the source is in the same candle?
No, it can be on
Is
same
in the
candle.
same is in the same zone?
I'm coming. Let me, I think
Like
I should take it on the chart for you to see if what I'm saying is okay by you. Okay. Now this is H4.
like that one in February 27 with
Um,
the semaphore on it.
just a minute.
Mm.
Just
This one, the big candle bull.
okay. Just a minute. All right, Helena, you're welcome. Helena, you're welcome. So this is our day two training on Btmm and ICT. So like I said from the beginning, we anchor H4 time frame on daily time frame demand and supply or other block. We enter from M15. Now the reason we enter from M15 is this because we want to have smaller stop losses and early entry. And for that, let me give a disclaimer, right? I'm not a financial advisor. Neither do I give financial advices, right? This is a Btmm and ICT day two training. And this training is for educational purpose only. As we all know, no strategy is a holy grail. Past profit does not guarantee future results. So you trade at your own risk, right? Okay. So today, like I said, we're discussing on the day two, right? So the day two is mainly for entry. Mainly for entry, like I said, we trade H4, we anchor H4 on daily time frame, demand and supply zone, or daily time frame other blocks, right? Then we enter from M15. Right. So we have three main categories of entry here. But as for my training purpose, I've restricted it to two of them. Right? I'm restricted to two of them, which are these. And I will talk about, I will use one other one as an example. Is T3. We use it, I will review this one. I normally call it trend line break. But for now, I I focus mainly on two of them, the A and B. This C, I've removed this one because of using the chart patterns, right? I now use a trend line break as an entry method within the range. Now let me take you now. Let me explain to you what I mean by outside the range and within the range, right? Yeah. So let's proceed. Yeah, outside the range. Now let me show you what I mean by outside the range and within the range, so you understand. Now, can you see my chart?
Yes.
Now, good. If you look at the chart, you see yesterday's high and yesterday's low from here. This dotted blue tracer, that's what it's called. Yesterday's high or yesterday's low. Can you see it? The place I drew.
Yeah.
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 So okay. So everything that happens outside this range, like here and here, is called outside the range. The anything that happens inside of the box is called within the range. So here is within the range. Everything that transpires inside is within the range, while everything that happens outside is called outside the range. You got it?
Yes.
Yeah. And how do we come about that? Now look at it. This was on Thursday's high, right? On Thursday's high. It became a benchmark for on Friday's high. Can you see that? And this was on Friday's on Thursday's low. It became a benchmark for on Friday's low. Does that make sense? That's why we have yesterday's high and yesterday's low. Can you see that?
Yeah.
Yeah. So that is what I meant by outside the range. So when I mean outside the range, I'm referring to these regions when price breaks outside and it comes up to this region, outside yesterday's high and yesterday's low. Can you see that? So this is outside the range. Then everything that happens inside here is called within the range, right? So sometimes price come outside the range and sometimes price does not come outside the range. It stays within the range and it still makes its move. So that is why we have two categories of entry, outside the range and within the range. Does that make sense to you?
Yes.
Yeah. After we have spotted the bias on daily on H for which is breaker and source, and we have anchored it on day time frame, demand or supply zone or other block zone, then we enter from M15. Maybe like I said, sometimes price will come outside the range, or sometimes price will not get outside the range. So whether it comes outside the range or not, we'll still have our entry and we'll still trade in line with the direction of price. Make sense?
Yes. Yes. Yes.
Yeah. So that is what I meant by outside the range and within the range. Now, outside the range, we start with outside the range, right? We start with outside the range. Now, outside the range, trading outside the range has three core lists of confirmations on M15, depending on H4 bias. Now, what am I trying to say? Outside the range have three confirmation, three colors of confirmation, right? Now let me explain. Like I said, we have price might either be on aside on yesterday's high or yesterday's low. Is that true?
Yes.
Price that is price might come to yesterday's high, like I've shown you now. Let me show you again so you can see it clearly. Now, what I'm not saying is this: that price sometimes price might get to this region, right? Because this yesterday's low price came here, And sometimes price might come to yesterday's high, and what? It might trade off. It might come to yesterday's low, and it might rally, right? So depending on the region price is, that's what we trade. But it's going to be a determine, the H4 will determine if we are to trade from yesterday's low or from yesterday's high. Does that make sense?
Yeah.
Yeah.
It
And
means that when we find the H4 bias is buy, then we wait on the yesterday low to buy, right?
good. You got it. Straightforward. That's just it. Yeah. So if we have H4 to be a bullish breaker and source, right? So we are focusing on price on yesterday's low to buy it. Right. Now, these are three colors of confirmation of outside the range. One, price at yesterday's high, yesterday's low, right? Then two,
Right.
TDI confluence, right? It might be shark fin or blood or water, right? Right?
Yeah.
Yeah.
Right.
And this entry usually what LSB plus retest, right? Yeah. Now
Right.
we'll focus on one of them, right? Now we'll talk on yesterday's high. Let's see how it goes. Now on yesterday's high, what does that mean? It means number one is a stop on high drop, is a bearish bias on H4, and we're waiting for a price to get to yesterday's high so we can sell along with H4 bias. Making sense, right?
Right.
Yeah. So let me show you from the charts. Sometimes we get the setup. Okay, sorry. Let's continue. Now look at this. This is what you're seeing here is the daily cycle on Beat the Market Maker, the daily cycle, right? What I mean by daily cycle, this is what we normally trade those days. As far back as 3 to 4 years ago or 5 years ago, this BTMM daily cycle works very, very, very well. How do I mean? But now the market has tried to overpower this method, because sometimes we have this method, it plays out, but till now it still plays out to an extent, but it does not give you a beautiful accumulation, stop what high, long sustain run, and New York reversal. Sometimes you see it, sometimes you don't see it. So now that's why we added ICT concept to it, right? Okay, so this is the daily cycle of BTMM, right? Now, this number one is normally HR session. On HR session, that is when they accumulate contract, they accumulate buyers and sellers together, right? Like I said, if price is on yesterday's high, it means what? It is a bearish setup on H4. That means we have a bearish breaker and source, right? Now we are trying to trade along the trend, and you saw that if here if this place, this on the BTMM daily circle, right? After the Asians range session, right? This move to the top is normally a counter trend. It's normally a counter trend, and this is where they do a stop hunting. After they have accumulated contract during the Asian session, right? They do a stop hunt to the high. This stop hunt to the high is normally a false move to take out those who got the buyers right? Now, some persons know that price wants to sell. So first of all, price will move against them, right? By going to the high. And normally the distance from Asian range box to the stop on box are normally 50 pips, 20 to 25 to 50 pips. Are you on intraday? If you are an intraday trader, your stop loss is not up to 50 pips. Am I correct? You cannot set 50 pips stop loss. So they will drive price to yesterday's high and what? And form an M here. And by doing that, right, the M that they form, number one, they have took out those, they have took out the sellers, right? They took out the seller by hitting their stop losses. Then what? They form an M on this high. The purpose of forming an M is to what? Is to grab those that did what? A buy stop, because some people thought that as price got to yesterday's high, right? Price will continue from there and go to the upside. Little did they know that price will what? We trap them. They'll trap them on this high by doing what? An M. So by doing that on this high, we get what we do is that we do breaker and source retest. That means what? LSB plus retest, right? Our breaker, then our source, right? As price trade to that region, right? This will focus on. Price will come here. Then as price trade below the breaker, right? it goes back. Then we said what? A sell stop from here and price goes to the downside. Now, in this daily cycle, what we actually focus more is this loss of steron. This loss of steron is it has a minimum of 50 to 70 pips, right? So this first move, this move to the upside, like I said, if you follow my H4 trend very well, I said something that normally this first move you saw here is that bullish candle on H4 bias. It's normally a false move. They do that to what? To stop out those who want to sell, and to what? It's like a fake out to those that want to buy. So as price is going up, many persons rush into it for a buy. And when they get to this high, they form what? An M, right? And price move to the downside. What we're actually focusing more on this daily, on this M15 is this long sustained, right? In ICT, they call it accumulation. They call it accumulation, manipulation, and what? Distribution. ICT call it like that. Why Btmm call it consolidation, right? Sorry. Btmm call it consolidation, right? Stop hunting, long sustain run. This is long sustain run. And what? New York reversal. Why ICT call it accumulation, manipulation, and what? Distribution. Did you get that? That's the difference between ICT and Btmm, but it's the same thing, but they have what? Different terminologies for it. All right. So this is Asian rate what? Accumulation. They accumulate contracts, right? Why they manipulate them from here by what? Hitting their stop losses and absorbing those that did what? Penny order buy stops that want to buy price from here. And by doing that, they form an M and what? They move away. So our target is what? This logs of steron. But without us getting price at yesterday's high, we will not trade, right? So sometimes price normally come out of the range to form an M, right? Immediately price come out of the range, we look out for what? We look out for breaker and source, right? We do breaker and what? Source retest, right? LSB plus retest, right? As price trade below, we define this as our breaker and LSB, right? As our source, then wait for price to trade back and we sell, right? And this selling is what is in line with what? H4 bearish bias. Does that make sense to you?
Yes. Okay.
Right? Yeah. So
Right.
So as price get to yesterday's high, if it's a bearish bias on H4, wait for price to get to yesterday's high, right? As it formed a breaker, right? Bearish breaker, which what? The last bearish candle you see before the peak formation high or the high, right? As price trade below it, we identify the source, then what? Wait for a retest, right? As price trade back, like I said, wait for a retest, then what? We set a sell stop from here. We enter from the retest from this region here. Like me, I set a sell stop here. So as price is coming down, it admit for a sale, then I'm on the trade. Then I set my stop loss what? On the high of the source. You can see the stop loss is normally 15, maximum of 20 pips, minimum of 10 to 15 pips, right? Yeah. So it's still the same thing. Like I said, this place is what is our focus. And that's what the price has gotten to yesterday's high. So that what we can sell along with H4 buyers, right? So HRH accumulation with a price to get to yesterday's high, and what? Price will form an M on this region, then we sell to the downside. Then New York reversal time, when it's New York session, right? Before then, it has made a move to what? A move of 50 to 70 pips, which is what? Our target. You know, due to Btmm, we normally have what? 3 levels of what? Of fall, right? Level 1, level 2, and what? Level 3. And we have a W, right? A W and New York reversal, then exchange accumulation again, right? Yeah, but these levels are level 3, levels 1 to 3 is not our problem here, right? The main thing is that when price gets to yesterday's high, right? It normally forms an M, right? It does two things, right? The purpose is this: it will take out the sellers and what? Accumulate those that did a buy stop from this high, and what? It kills them to the downside. And by doing that, we are trading what? In line with H4 buyers that has a bearish setup. Does that make sense?
Yes.
Yeah. So let me take you, let me show what I'm trying to say from here. Look at Euro USD, for instance. Let's look at Euro USD. I love using this Euro USD because It's very, very good, right? Let me show you, right? Look what I mean. Does this. Now look at this. Mhm. Can you see my chart?
Yeah, sure.
Yeah. If you look at Euro USD, it was anchored on H4 on daily time frame supply zone. Is that true? Let me show you.
Daily time
Look at it.
frame. Yeah.
Can you see that?
Yeah. Yes.
Yeah. So that is the reason why we are selling H4 now. Now let me go to H4. Right now from H4 you have what? Your breaker and source here, right? It's a breaker, right? And this is our source, right? Partially below, this is our source. Does that make sense? Yeah, so this is just the LSB.
Yeah.
So this is the retest. So if it was here, we'll say now this is where price is right now. Price is currently on yesterday's high. Did you see that from H4? Because from H4, you can see previous day high and previous day low. Does that make sense?
Yeah.
Now look at M15 now. Let's come to M15. For M15, our breaker is going to be this. This is the bearish candle, right? Because if you look at the price got to on Friday yesterday's high. Are you seeing that, right? On Friday's
Yeah.
high.
It's
Now,
on yesterday high.
yeah, so we'll get our breaker, right? This is our breaker, right? As price trade below it here, we identify the source as our, or identify this as our source. Then this was the retest. Look at the retest now. Look at the retest. Price retested the breaker and it moved away. So this is a perfect setup that happened on Friday. Does that make sense? Yeah.
Yes.
So my entry is going to be what I will set a set stop here, pending order on the low of the breaker. Here, I'm going to set a pending order here, set stop here, right? And my stop loss is going to be on this high. Look at the stop loss. How many pips stop loss? 14 pips stop loss. And
14. Yeah.
yeah, and look at it. It has done 27 pips profit. That is almost ratio 1:2. Can you see that? Now, so if you enter from here, for instance, like I said, if you have entered from here, right? If you have entered from the here, it came down, it did 15 pips and it went back to your entry again. And finally, it did what? 28 pips. So this is a perfect example of price outside when price is outside the range. Did you see that?
And on H4, the breaker is
No,
this is still sell bias, yeah.
no, look at it. It's a bearish setup, right? Look at it. This is bearish breaker and source. So on H4, we have a
Yes.
bearish bias. So that's why we are focusing on yesterday's high from on Friday. Look at the Friday setup from here. Look at the Friday setup. You can see it from here. Look at it from previous day high. Look at it from previous day high.
Yeah.
So this is where price came here and price is going to the downside. Can you see that?
Okay. And it's still sell bias until?
Yes, it's still sell bias. Look at it. So what price did on Friday was what it was an institutional order flow. How do I mean? Price came here and look at it. It retested this what? Order block from here. Can you see that? This bullish order block from H4. So price came and retested this what? This bullish order block like this.
Oh yeah. Okay.
And it moves away. Can you see that? Yeah. So that is an
Yes.
institutional order flow, right? Yeah. So if I want to mark it, I'll say what? A bearish setup on H4, M51 institutional order flow, right? Look at it. Because an order block along the trend, right? So this is a new buy. So it did a retracement and it's now heading to the downside. That's why on Friday we have what price at yesterday's high. So my list of confirmation on this: number one, price at yesterday's high. Number two, look at TDI, blood on water, right? I will talk about TDI, but let me just show you. TDI what? Blood on water, because it didn't come out of the band, so it's not a shark fin. Then three, entry at what? LSB plus retest. And look at the LSB, right? Price trade below it and what? Did a retest. And that was how price moved away to the downside. So on Friday was a good setup from it. Did you see that? Number one, we have what? Bearish buyers, right? A bearish setup on H4. Two, price at yesterday's high, because it came out of yesterday's high. 3, TDI complex is what? Blood on water. Then 4,
Blood on water.
yeah, entry as what? LSB plus retest, and boom, that price moves to the downside.
Okay.
While we anchored the H4 on what? Daily time frame, what? Demand zone or order block. Does that make sense?
Yeah, sure.
Yeah, so that is what I remember outside the range. So this was a perfect example of outside the range, whether bullish or bearish, right? Yeah,
Right.
like I said,
About the TDI, may
okay.
I ask?
I sent you the video of
I don't
TDIs, right?
really, what?
I sent you the videos of TDI, right?
Yeah, I know.
Okay.
But about the blood on water, I don't really
Okay, I will explain it. Don't worry.
understand.
I will explain it.
Yeah.
I'll just show you from here, right? Don't worry. I will explain it.
Okay, okay.
Yeah, don't worry. That should be an issue. Yeah. So this is what example of what I made a price at yesterday's high, right? Yeah. So let's continue.
Yeah.
Now, yesterday's low. When I'm talking about price at yesterday's low, what do I mean? I mean what? A stop on low rise. That is a bullish bias on H4. I will wait for a price to get to yesterday's low so that we can buy along with H4 bias. Then we anchor the H4 bias on bullish order block or the demand zone on daily time frame. Does that make sense?
Yes.
Yeah. Yeah. So look at it. So this is a reversal of what I just explained from a bearish perspective, right? But now we have a bullish pattern of it now. Look at this. Number one, we have what? HR range accumulation. So it's normally, if it's BTM, like I said, you have accumulation, right? A stop hunt to the low. You normally do a stop hunt to the low. And what? They form a W, then what? And what? A long sustainer, right?
Distribution.
Yes,
Yeah.
distribution. We have manipulation, accumulation, manipulation, and what? Distribution. So our main focus is what? This distribution, which is what? A long sustainer. Like I said, it spans up to like 50 to 70 pips on a volatile day, right? But if market is not volatile, you see 30 pips, 25, 30 pips, right? Like what we have on Euro USD. So that Friday was not even a volatile day. Market didn't move that Friday, right? Yeah. So this is accumulation, manipulation, and what? Distribution or accumulation, stop onto the low and what? Long sustainer. Like I said, this move you saw, right? It is the bearish candle you see on bullish bias on H4. You know, sometimes we have on a bullish bias on H4, you have what? Bearish candles. Those bearish candles, they are meant to attract retail traders to be selling, right? So that when they get to the yesterday's low, what happened? They form what? A W. So at this point, we do what we actually focus on is what? This breaker and source, right? We have a breaker here and we have a source, right? So as price trade above the breaker, we identify the source. There, price does it trades back into either the breaker, right? Sometimes price will trade into the breaker if you start buying. Sometimes if you trade into the source and what it will buy. That's why once price trade into the source, right, into the breaker, I will set what? A buy stop from here, so that as it's coming out, it's going to pick me, activate me for the trade, and it will buy. Then I will set my stop loss on this low. Does that make sense?
Yes.
Yeah. So our stop loss, like I said, is normally 15 to 20 pips range, right? Yeah, 15 to 20 pips range, but it does not go. So, and if you see that the stop loss is very far, right? You can enter as price comes into the breaker or source. You can enter the price within the breaker or source, right? And make sure your stop loss is still within outside the source, on the high of the source. Does that make sense?
Yeah.
Yeah. Yeah. So that is it. So now let me explain the TDI for you. Now look at it. TDI is a good indicator, right? Like I said, there are two things the market maker cannot fake. The market maker cannot fake a shark fin of TDI, and they cannot fake where liquidity pools are allocated in the market, right? Where they find liquidity pools when we see wicks or pins from it or pins from the down, right? But let me explain it. So the TDI have 5 strategies of trading it, right? 5 methods of trading. Number 1 is shark fin, divergence, the blood of water, the squeeze, and what market baseline as 68 and 32, right? Now let me explain for us. Now let me go to the live chat and explain what the TDI means, what it is. Okay. Now, yeah. So the video I sent to you is from the owner of TDI, the guy who created the TDI, the Maloney, right? He created TDI. Now look at it. Let me explain for you what the TDI is all about, right? Number one, a shark fin, right? A shark fin is when,
Yeah.
now let me explain each other for you. We have, this is called the volatility band, the orange, the green
The
band
blue
you've seen
one.
there. Yeah, volatility band, right? The upper and
Yeah.
the lower volatility band. It's called volatility band, right? Yeah, it means whenever
Yeah.
price breaks outside of the band, that means what price is moving aggressively. And when it comes outside of the band, it's called what? A shark fin. Does that make sense to you?
Yeah. Yeah.
When price
I
comes
know.
outside of the band, it's called what? A shark fin. Like this space. Look at here. Price broke outside of the band from here. Look at it. Can you see that?
Mm.
Yeah. So this is a
Yeah.
shark fin. Yeah. The way
Yeah.
the balloon explained is like this. Okay. Steve Murray said, if price break outside of the band, it's like a shark jumping out of the ocean and try to plunge itself back into the what? Ocean. Shark or dolphin, right?
Mm.
You know, they normally jump
Yeah.
and they plunge themselves into the ocean again. So that is a shark. That means as price trade outside the volatility band, it will likely come inside again. So whenever price trade outside of the band, expect price to return. Price does not trade outside of the band and stays there. It will come back again, right? So whenever you have a setup
Right.
like that and price is on yesterday's high or yesterday's low or within the range, it means what price will likely reverse. So when we have that setup, kind of setup like that, we have what? A shark fin. That's what we call a shark fin. Does that make sense?
So when you find a shark fin on the yesterday low,
Or
you
yesterday's
have to
high?
wait. You have to wait until the RSI come back into the volatility band.
Yes. So when it comes into a volatility, but that's going to be a confirmation. But our entry is using LSB plus retest.
LCB.
Yes,
Okay.
that's our entry. So the shark fin is not our entry. It's a confirmation that
Oh,
price will
okay.
definitely
Just for
come back.
confirmation. Yeah.
Yes, but the entry is what? LSB plus retest, right?
Yes.
That is our entry.
Okay.
So the TDI just like a confirmation, right? Yeah. So we have the volatility band. The yellow line is called the market baseline. The red one is called the signal line, and the green one is called the what? The RSI, which is what? The movement of price.
RSI. Yeah.
RSI, yeah. The green one is RSI. The red one is called the signal line, right? You know, though
Right.
the TDI has its own entry. The TDI entry is when the RSI crosses the signal line. That's the entry anyway. But we are using LSB plus retest.
Okay.
Yeah, yeah. So whenever you have a shark fin, so that is a confirmation of price is going your way, right? Yeah, so that's a shark fin. Then blood or water is like, if you spill blood on the surface of an ocean, right? Shark normally sense it from afar. Am I correct? And they rush to that source, right? If a blood is spilled on the surface of an ocean, a shark can sense as far as like I was told that a shark can sense as far as like 50 kilometers away or 100 kilometers away. They can sense that drop of blood in the surface of the ocean, right? So they can sense it and immediately they head to where that blood scent is what is located, right? So a blood or water is when the RSI crosses the signal line within the band. Look at this. Look at this place now, right? This is blood or water. So for this Euro USD on Friday, it was what? A blood or water setup. Did you see that?
The
As price
RSI.
yes, the RSI is the green. As it
RSI cross the
red one, the signal line within the
red
band.
one
Within the band.
within the band. Okay.
Yeah.
Okay.
Yeah. So this is what?
Yeah.
This is blood on
Blood in
water.
water.
And that is what it is in line with what price at yesterday's high. Did you see that? So our confirmation is this: number one, berry setup on H4. Two, price at yesterday's high. Three, TDI complex is what? Blood or water. The entry is what? LSB plus what? Retest. And
Retest.
we kill the market from there. Why we set our stop loss on this high. Easy as that. Did you know why? Look at this. On here, right? They took out this. They took out those that put. Now you know that if you look at this is yesterday's high, right? Look at it. They took out what the sellers on yesterday's high, right? They did a stop punch, right? They took them out and they activated the buyers and what price moved to the downside, right? They hit their stop loss, right? And they activated those that wanted to buy this price because price was moving aggressively to the top and price returned and price moved to the downside. So they have cleared the liquidity pool on this yesterday's high. Does that make sense to you?
Yeah.
Yeah, they hit every seller on this place, right? Those that were trapped on this high, So this kind of took them out, right? Yeah, and they moved to the downside in line with what H4 bias. Does that make sense?
Okay, makes sense.
Yeah. So
We use the yesterday high and low. It is the sign of the liquidity pool.
yes,
One of one of
exactly.
the sign.
Yeah.
Yeah.
So
Okay.
they normally use immediately they trade above yesterday's high. That means what they've raided liquidity pools on yesterday's high.
Yeah.
Yeah, they've grabbed the liquidity pool on that, right? Now, see the third one is divergence. If you look at I don't know if your TDI has this divergence. I don't know. Should I send to you? I said the TDI that has the
You
divergence.
send the TDI Pro, yeah.
Yeah, okay. The TDI Pro has its own divergence, so you don't need to look for divergence. It draws for you, right? Yeah. So we have the divergence to the bearish side and the one to the bullish side. One to the bullish side, you go to see confirm a clear one and bearish one is that, right? Now let me talk about TDI squeeze. TDI squeeze is normally accumulation during what Asian session, right? Yeah. The squeeze is when the upper band and the lower band compresses themselves together. It shows what sign of what a ranging market. Look at here, right? Price was range here, right? It ranged, then it did what? Accumulation, manipulation, and what? Distribution. Did you see that? During Asian session, right? It
Yes.
ranged, right? Yeah.
Yeah.
Asian session and New York and what? It ranged. So, and this is a London session. It also ranged, right? Because this is this is the high exactly. And it moved to the downside, right? Yeah. So you can see the what? Accumulation, manipulation, and what? Distribution. Did you see that?
Distribution.
So we have one,
Yes.
2, and 3. Then it might turn from there anyway. Then it's going to do again and it's going to go to the downside, right? So this is what the daily cycle you're seeing. Like I said, sometimes it plays out, sometimes it does not play, but nevertheless, if price gets to yesterday's high and it's a bearish bias on H4, this is how it should be. Does that make sense?
Yes.
Yeah. So
Yeah.
the other one of TDI is what? The market baseline at 32, 68 and 32. Now, if you look at the TDI, you see the range of TDI at what? This is 68, right? And this is 32. Can you see from the side? Carry down part I'm drawing.
Yeah.
Yeah. So
Okay.
now see the market baseline it's used to what indicate what a trend. If price is below it, that means what price is on the downtrend, and if price is above it, what price is what is an uptrend. Now, whenever the market baseline is above 68, what it means what, and it's coming down, it means what price is going to sell. And whenever is below 32, what it means what price is what you go to reverse, right? If it's above 68, we use that what as market reversal, right? And if it's below 32, we also use that what market reversal. Does that make sense? Now look at it now. It's not up to, but in the places where you see it at 68, it means what price will likely do what? Price will likely reverse, right? If it's below 32, that means price is what is reversing, is going to turn to the upside. If it's above 68, it means what price is going to turn to what? To the downside. Now look at here. You saw it on 68, right? And look at it from here. 68,
Yeah.
yeah, and something like this. That's how price moves to the downside, right? But we don't
Right.
use those confirmation. We only use what? Blood or water, TDI,
LSB range.
shark fin, and what? Divergence, right? But we just see that,
Oh.
yeah, we just see it as a means of what? Reversal, but we don't just pay attention to that, right? Now look at this HR
Mm.
range now. Look at this HR range accumulation here. Look at here. Yes, here is a squeeze, right? Look at it. We have a TDI squeeze here, right? Look at TDI compressing against itself. Upper band and lower band. This is a TDI squeeze. It shows what? Accumulation. This is a ranging market. So you stay off this market. Whenever you have a TDI squeeze, right? You know that market is what? Is ranging. So these are the signs you see. So the TDI is what? Is very powerful. A powerful tool in BTM. It shows what? A ranging market. Can you see that?
Yeah.
Yeah. Question? Do you have any?
So we only use the blood on water, Jacqueline, and divergence
Yes. Those are the
only.
3 TDI conferences we use.
Okay.
Yeah. So can we proceed?
Yes.
Yeah. Now look at this example. Let's look at this example. It's an example. Now look at this now. This is accumulation, right?
Yeah.
Manipulation, a W, and what? Distribution.
Distribution.
Yeah. Now let me ask you, from this, will you say this is a bullish bias or a bearish bias on H4? Look at this very well.
Bullish bias.
Good. Exactly. You got it. Now look at it. Number one, price is on yesterday's low. This is yesterday's low, right? So price traded below yesterday's low, right? And number two, we have what the TDI conference we have here is blood or water. This was a mistake, blood or water, because look at it, it did trade below the volatility band, right? Yeah, it's on the volatility band, right? Yeah, but the RSI crosses the signal line, right? There trades what LSB was resistance. Look at the LSB, right? This is a breaker, right? As price trade above the breaker, right? Yeah. Wait for price to trade back here. So price, so I for one, I will set a buy stop here, and my stop loss is going to be here. And as it's coming, it's going to activate it for a buy, and my stop loss here. Exactly. And what happened? Price did what? ADR low, right? Price came all the way to ADR low, and what? And it came to the high. But as for us, the ADR low is not an issue, right? ADR being high and low is not an issue, right? Average daily range is not an issue. But the most important is what? Price is at yesterday's low, and it did what? LSB plus retest at TDI complex is okay. Once we have those three, we are good. Look, this super big signal is just the green arrow, right? But it's not the main issue. Yeah. The main issue is what? Break and source, right? Retest and boom. That's the move. Yeah.
Yeah.
Perfect.
Okay.
Yeah. So like I said, the review I did was simple. I added what? A daily time frame, demand or supply zone or order block. Then H4 and M15, everything is still the same. Yeah. Yeah. Entry, like I said, is LSB plus retest. I believe you understood what LSB plus retest meant, right?
Yeah.
Yeah. So like I said, I use either buy limit or sell limit or buy stop or sell stop on yesterday's low or yesterday's high. Then I get activated. Then we are good. Now look at a live example, right? But I've showed you a live example from the bearish bias on Euro US. Am I correct? Yeah.
Yeah.
Yeah. Okay. I think I should look at one of your assignments and see.
Okay.
I know you got. Let me look at one of the assignments you did today. The one that let me see the one that have bullish bias. Let me see. Which one is this? GBP. Okay, let's look at GBP USD and see. Then you can see. Go to GBP USD and see. Taking my time to explain for you so you understand it very well. Okay, GPU is still a bullish setup, a bearish setup. So let's see if we can have a bullish setup. Let's see. Okay, I think we have, yeah. Now look at this. Now, first of all, let me go to daily time frame and see. Okay, look at this one, right? Did you see this?
Yeah.
Yeah. So this is one, right? Yeah. Price came all the way to here, right? Yeah. And so that's that. Euro AD daily time frame.
H4.
Yeah, H4. We have okay, I think I should use this. Source. Yeah. Yeah, but let's go to M15. Okay. Go to M15, Euro AD. Sorry, my screen is not wide enough for that. Okay. Okay, look at Euro AD. Did you see that? A perfect setup, right? Did you see that? This is our breaker, right?
Low.
Yeah, yesterday's low. Good. And blood or water again. Did you see that?
Blood on water.
Yeah. As price trade above it, this week we identified the source. Here is our source, right? Yeah. And these are entries. So as price went out and it came in with this, right? Yeah, we can use this, right? And so what our call is of confirmation number one, a bullish setup on H4, right? Yeah, price at yesterday's low.
Setup on
TDI complex is what? Blood or water, and entry
Blood
as
and
what?
water.
At LSB. Now look at the stop
LSB.
loss. Yeah. Now look at the stop loss. How big is the stop loss? Let's look at it. It's 0.80 from here. This is 16 pips, right? Yeah. And that's how price moved, right? Price did 60 pips and also
60 pips.
81 pips. Okay. You see that? Yeah, exactly. So that is it. So this is a clear example of what? A bullish setup of price at yesterday's low. I hope you saw the things I drew, right? Look at it. Number one, look at H4. Daily time frame what? Daily time frame demand zone, right? Or other block, right? On daily time frame. Two, bullish bias, right? Because I break and source. So we're expecting price to what? To rally to the top, right? So price is going to rise to the top. Did you see that? Yeah. Then M15 is what? LSB plus retest, right? Look at the confirmation of the M15. Break and source, and boom, that's it. Bullish setup. Does that make sense to us?
Okay. How about we missed the first one in M15? Can we enter again?
Okay, if you meet the first one on M15, you can enter using a trend line break. Here, you draw like this, right?
Yeah.
And as price trade above, you enter and your stop loss is going to be here.
Okay.
On the low, yeah. So as price trade above.
After a retracement, and then we make a trend line, yeah.
Yeah, look at it. This is 6 pip stop loss, and so the equal highs it made 30 pips, right? Almost ratio 1:5 or so. Look at it. Yeah. So if after a retracement you draw a trend line break, and as it breaks it to the top, you are in the trade. Good one. Does that make sense? In case you miss it, that's the way to go. Does that make sense?
When we'll take profit,
okay,
or just set it just 50 pips.
Yeah, normally the take profit is at the rate of 30 to 50 pips. 30 to 50 pips. Yeah. On a volatile day, it runs up to like 60, 50, 60, 70. But when it's not volatile, it runs like 30, 25, 40. Yeah. Okay. So normally take profit is normally at equal highs, because price cannot form an M and it can go against you, right? As price cannot form an M like this and it can start to return. So when you get to an equal high, please take profit or secure your profit. Move stop loss to break even or secure your profit. Yeah, to avoid the M formation, right? And it might likely come down again. So we're lucky that price even broke it, right? Yeah. Does that make sense?
Should we plot nearest bearish order block in H4 for the take profit, or no need?
No, in as much as you've gotten the bias, right? Just trade it. Yeah, we're entering from M15. But if you're a swing trader, like I said, you can just use break and source or other block, and you ride it to the top. Yeah, make sure your stop loss is on this low. But if you're intraday, just your everything you do is on M15. But when it gets to this high, price going to react, right?
Yeah.
So I think we should go to outside the range now. I think I've shown you the example, so there's no need for that, right? Now at least you're able to see. Now look at these ones, right? This is breaker, right? And this is what, as far as price trade above, price came to retest the source. Now look at the price at yesterday's low, TDI complex, which is, look at it, number one, price at yesterday's low, right? TDI complex what? Blood on water. Entry at what? LSB plus retest. Number four, what? Bullish setup. That's what? Bullish breaker and source. And 5 came to retest the source, right? And that was that price. This price did a W, right? A move to the upside, right? Yeah, that's right. Yeah, so that is it. So with this, you can saw that the stuff is really okay. Like immediately we have daily time frame demand and supply zone, price at those levels or other block zone. Every other thing on the H4 M15 runs smoothly for you. They just run smoothly. Now, yeah. Now this is a very setup, right? And of which we have done that on a live chart, right? Now look at it. This one is number one. Price on yesterday's high. First of all, we normally start from what? The H4 breaker and source. That is where we normally start from, right? If you can identify the breaker and source on H4, Then we go to M15. But like I said, you must anchor it on daily time frame, demand or supply zone, or order block. Am I correct? Bullish or bearish order block.
Yeah.
Yeah. Then the break and
Yes.
source on H4, you anchor it on that. Then M15 is on entry, right? So when you see price of yesterday's high, that means what? It's a bearish setup on H4. You can see that this place we have what? Accumulation, right? Manipulation, and what? Distribution. Yeah. So sometimes it will form an M, sometimes it will not form an M, right? Yeah, but
Yeah.
yeah. Now look at this. Look at the breaker and the source. Traded below and retested and what? And it moved. So this is the setup. And this price, when I look at it later on, this price moved over 180 pips to the downside. It broke this low and it moved to the downside. Yeah. So once you've gotten the breaker and source anchored on the data frame, it has determined your bias already. Your bias has been set. Every other thing moves smoothly. Did you see that?
Yeah.
Yeah. Okay. Now I'll talk about within the range. When I told us within the range, I looked out for setups that are inside the range, not outside the range, right? That means price did not go outside the range. Did you see that? Right?
Yes.
Price didn't get to outside the range. Price were just within the range, right? Within the range, we are talking about using what Fibonacci retracement at what OT zone, optimal trade entry at OT levels, right? Which is level of OT means what? OT is an IC concept, right? Fibonacci retracement at 62% retracement, 70 and 79% retracement level. It occurs on M15 in line with what H4 bias. So we use it on M15, right? That means when price did not go outside of the range, that is when we use these OT setups, right? Where price did not get outside the range. Come in, let's see. Right? Where price did not get to outside the range. Just a minute. Can you see my chart? Helena?
No. Still the PowerPoint.
Okay, excuse me. Can you see my chart?
Yes.
Okay. All right. Can you see?
Yeah.
Okay. Now let's proceed. Look at this. Number one, like I said, everything starts from what? H4 bias. Now look at it. We have bearish setup, right? We have bearish breaker and source, right? Yeah. Bearish breaker and that's the source. Yeah. Bearish breaker and source. Yeah. Breaker and source. And this source, right? So we have bearish setup already. Number two, look at price. Now let's focus on M15. Just wait. I think I should use. Excuse me. Let me. Now, okay. Now let's look at this. This is within the range. How do I mean? Look at it. First of all, this was yesterday's high. Look at it. Look at yesterday's high from here, right?
Yeah.
And yesterday's low. Yesterday's low is still beneath, right? Yeah. Okay. Now look at this. Price came, but it didn't get to yesterday's high. They say that price ought to get to yesterday's high so that we can use LSB plus retest and we'll set to the downside. Now look at this. Since price did not get to yesterday's high, so what should we use? Look at H4, right? Bearish breaker, right? And so look at the retest and that's the move, right? Now price did not get to yesterday's high on M15. So how should we go about it? So this is where the concept of what? OTE comes in, optimal trade entry, right? Right? OT is just like I said, it's an ICT sort, right? Usually what Fibonacci retracement at 62% retracement, 71 and 79% retracement, right? Yeah, these are the levels, right? 79, 70 and 62% what? Retracement levels. Now look at it. When you draw the swing high to swing low, right? This is swing high, we draw it to this swing low, right? And it gave us the calibrations as written here. 62, 70 and 79% what? Retracement level. Look at what price got to now, right? Price got to the OT what zones. Price is at the OT levels now, right? Our entry is going to be as price close below 30 EMA, right? Which is the cash of the red EMA. You understood? Yeah. In as much as is a bearish bias on H4, right? We draw the Fibonacci retracement swing high to what? Swing high to swing low. Then it gives us price at what? OT level. When price comes to those Fibonacci retracement levels, 62, 70, and 79% retracement levels, we are saying that what? Price is at OT zones. And look at that price bounce off the what? The 200 EMA as well. Did you see that? We tested the 200 EMAs, right? Yeah, but our focus is more on the what? On the OT levels, right? Like I said, 50% retracement level is not an OT zone, it's an equilibrium, right? Yeah. So price at OT zones is priced at 62%, 70, and 79% retracement level. Now look at it. The reason we use OT zone because of price don't get to yesterday's high. So sometimes price does not get to yesterday's high. So what we use is what we use price at, we use OT levels. Price at this Fibonacci what? Retracement levels, right? We draw swing high to what? Swing low. Then it gives us what? The calibrations. As price comes to this place, we look for what? Entry. Entry is when as price close below the red EMA, which is what? The 13 EMA. Look at it. Number one, a bearish setup. Did you see that? H4 have what? H4 is what? A bearish setup. Did you see that? H1 is what?
Yes.
A bearish what? Setup.
Bearish setup.
Yeah, that's bearish breaker and source, right? Yeah. Then number two, TDI color is what? Divergent. Did you see divergence here? Look at it.
Oh, okay.
Right? There's a divergence there. Then three, what? Entry as price close below what? The 30 EMA, which is yeah, the red, which is what? The cash up, right? Yeah, that is it. As you enter, then your stop loss is normally what? At the 100. Yeah. If you enter here, your stop loss is here. So before you take the trade, use your crosshair to determine the level of your stop loss. If you can take it, if it's above 20 pips, I will suggest you use smaller lot size or you let that trade go.
Okay, how to put the Fibonacci, the 0 and the 100 level?
Okay, I think I sent you I look at the picture I sent you. The settings are there.
Okay.
Okay, yes, the settings are there. I sent you. Yeah, just look at it. One of those pictures.
Fifth setting, yeah.
Yeah, you saw it, right?
Check.
Is there?
Oh,
okay.
Yeah. There's the level, but when to put the 0 level and the
let me show you.
100 level.
Yeah, let me show you from here. Okay, look at it. Sorry. Let me try and show you from here. Yeah. Okay, look at the fib settings here. Can you see that? Can you see my screen?
Yeah.
Yeah, look at it. Let me change it to yellow so you can see very well. Can come on very well. Okay, now let me go back again. Yeah. So you right click on the fib, right? Then you go to the levels. 0 profit scaling, 0.5, which is the 50 equilibrium. Yeah. Then you delete 32 and 28. We are not interested in those levels. Then are you with me?
Okay.
Yeah. Now look at this.
It just disconnected for a moment. Yeah.
Okay. Yeah, I'm back. Sorry. I received the call. Okay, so you edit you double click it and you edit it, right? Yeah, look at here.
Yeah.
And you keep
no problem.
Yeah, enter all of them. Yeah, that's how to set it, right? Yeah.
Okay.
Good. So that is it.
So
okay, let's continue, right? Yeah. So like what I was saying, so price didn't get to yesterday's high and break and source, then we draw from swing high to swing low because the downtrend, right? So it's going to give us calibration at OT zones. Then what? We take the trade, right? And that was how the trade ran to the downside, right? So this is So that is it, right? So you take the trade and price gets to what? Yeah, and price runs to the downside. Yeah, yeah. So that is that, right? So that is for what? A bearish setup. Now let's look at another one.
No, Festus.
Question?
For the what is this? Euro GPY. Okay. What is the point that you put this 100 and 0 Fibo in H4 candle?
Where? No.
So how you put the 0 and 100? Where is the high? Where is the low? I mean,
On the feed?
which one? Yeah. Which one is the high? Which one is the low?
Okay. Are you talking about the fib settings?
Yeah.
Okay. Let's go back again. Once you put it, everything will just fall in place. You don't need to get it accurate. Just put it. Everything will fall in place. Look at the 100. Just type it like this. The way it is like this. 100.
I
Everything.
know about the setting,
Okay.
but how to put it in the chart?
Okay. Oh, I wish I can get. Okay, let me show you.
Which one is the high? Yeah.
For a downtrend, for instance, if it's a let's say if it's a downtrend, let me look for chips. Look at this trade, for instance. Now, if this trade head to the down, I will place it here, swing high to swing low, right? Now look at this. This is an OTE settings, right? Because it's within the range. Now it got to 62% retracement levels. Can you see that? Right?
Okay.
Yeah.
Okay.
Then my entry is going to be as price close below 30 EM. I'll enter from here. Then and my stop loss is going to be on this 100. How many pips? 35 pips. I will not take this trade because the stop loss is high. But if I want to take the trade, I might reduce my stop loss, my lot size, so that I can accommodate this loss in case price decides to go to the up to form an M. Yeah. So my entry is going to be at price close. So this is going to be my entry, and it did a pullback of a drawdown of like 12 pips before heading to the downside and gave what? Almost 66 pips. So this is a purely OT settings. For a downtrend, you draw from swing high to swing low. Then it gives you price at OT zones. Can you see that? If an uptrend, for instance, you draw from swing low to swing high. Then it gives you price at what? OT zones. Did you see that?
Yeah.
Yeah. Then I'll enter from here. My stop loss is going to be 100, and price goes right to the top. So you use the recent high and low, the swings, swing low to swing high. Then it gives you, Fibonacci retracement is just like the pullback of retracement. How deep the retracement level is going to be. So the levels are 79, 70, and 62% retracement before heading to the upside. Does that make sense?
Is there some kind of clue when we should wait the price to touch the
you wait for it
high or low?
No. See, in as much as price is within the range, and watch. Once price form this semaphore within the range, it means price might not get out of yes. So this semaphore shows that price will remain in the range, but it didn't get out of the range. Yeah.
And then we use the Fibs.
Exactly, Fibonacci. Yeah. So this semaphore shows it will not go out of the range, because if you look at here already, price was already within the range here. Did you see that? Price didn't get out of the range from here. So that was why this one was just like a retracement, and price head to the downside. Yeah.
Okay. Yeah.
Yeah. Okay. Now let's look at this bullish one. Look at this bullish one. Let's look at this now. Okay, look at this. Breaker and source, right? Number one, we go to H4, right? This is bullish breaker and source, and this was the what? The LSB, right? The retest, right? And price what? Moved away to the upside, right? Now look at M15. Number one, price at OT zone. Since it's a bullish bias, I drew from swing high. I drew from here, swing high, swing low to swing high, and it gave me what? The calibration at what?
The retracement.
Yes, OT zone, and that was it. Exactly. Now look at here. Entry as price close above 30 EMA. So we're going to enter from here, and it went up, it did a drawdown, and finally what? It made its move to the upside. Look at the semaphore. This is semaphore is within the range, right? It shows that what price might not go down again, right? But will not enter until price closed above 30 EMA. So we didn't enter immediately, it dropped the semaphore. We wait for price to trade above the 30 EMA, which will be what? Our entry. And of which price did that. And boom, that was that price moved to the upside.
Okay.
Does that make sense to you?
Yes.
Yeah. And in case you don't want to use the OTE, right? For instance, like what I wanted to add before, right? In case you don't want to use the OTE, in as much as you've seen the semaphore already, you can draw a trend line break like this, a trend line break. And here is your stop loss. Your entry as price closed above the trend line, right? Then your stop loss is on what? On the semaphore here. Then you can buy from there. So you can use that method as well, in case you don't want to use the OTE zones. Oh, that's what I just said?
Yeah, okay.
Now look at it. Let me show you from here, for instance. Look at it. In case you want to use OTE zone, the OTE is as good as this. Here, let me take out this stuff. Look at it. In case you want to use OTE zone, right? Yeah. What you do is that as price does the retracement, you draw a trend line break like this, and you enter this price, right? Then your stop loss is going to be on this high. Small stop loss, which is what? 12 pips, and it moves to the downside. That's a good one.
Yes.
Yeah, so you can use either of this method, is the OT or the trend line break. You are good. In as much as you actually with what? The bias of H4 anchored on daily time frame demand or supply zones or other blocks. You are good. Does that make sense?
Okay.
Yeah. I hope you're learning.
Yes.
Yeah. Okay. Yeah, that is it. Now look at it. Okay, I remove these chart patterns, right? Yeah, I've removed them. Now look at it. There are two basic methods of scanning the market. How do you scan this market for setups, right? Because that should be a very important question, right? How do you scan markets for setups every day? Now look at it. I have this daily high and low dashboard on my screen. Look at it. Did you see that? Do you see this stuff?
Yeah.
Yeah. So look at it. It shows you price at yesterday's high, yesterday's low, weekly high, weekly low, monthly high, monthly low. These are places we have what? Liquidities. These are liquidity pools where we have trap volume. So the first thing I look at for, like, when I see price yesterday's low or yesterday's high, I will click it first. And it's going to show me, it's going to appear on H4 and M15. It will take me to both pair at the same time. Look at it now, right? This is AD USD, right? Right. So this is a very setup, right? So I should look for price at yesterday's high, right? Did you see that? Yeah. So look at, so this was on Friday move. Did you see that? A good setup on Friday. Look at it. Good setup. Look at breaker and source, right? Breaker, right? As price trade below, we identify this as our what? As our source, right? Yeah. So entry as what? LSB. As price go to the top like this, what? You set what? A set stop here. You put a set stop here, and boom, as price comes that it activates you. It did retracement again, and what? You are in again. And that was this move to the downside. Perfect. So what are our confirmation checklists here? Number one, bearish setup, right?
Yeah.
And sorry, I didn't tell you something. If we have a distance breaker and source, there's something I normally do on H4. If you look at it, look at this H4 now. Look at H4. Look at the breaker.
So far.
Yes. Breaker is far. So you use other block, right? It's far, right? You use other block instead of breaker and source. Look at it. Use what? Other block, right? Retest, and that was it. So you just mark it. So that's to determine what? It changed the bias, right? Yeah. Right? Yeah, that's it. And like I said,
we don't wait for the breaker.
No,
if the breaker is.
No, this is what? An order block, right?
Oh, just order block. Okay.
Yes, because the source is far. So you will not use that again. So, but it has given us what? A bearish bias. And make sure that this H4 is on daily time frame demand and supply zone. Now look at it. Good. It's on what? Institutional order flow, right? Look at it, right? Did you see that?
Yeah.
Yeah. So
Yes.
so that gives us what? A good idea about it. Does that make sense?
Yeah.
Yeah. So that is it. Then on M50, look at it. Bullish breaker and source. Look at our confirmation checklist. Let's go. Bearish setup, right? On H4. M15 what? We have what? Price at yesterday's high. TDI complex is what? Blood or water. Entry as what? As price closed below LSB was retest. We are game. And that was a move to the downside. How many pips did he do? Almost 50 pips.
50.
Exactly. Perfect entry, perfect method. So I just need to click on these levels, right? Click them and it will show me H4 and M15. Did you see that? Then immediately I saw.
Yes.
Yeah. Now look at the H4 now. Look at the H4 and look at the M15. Look, M15. Yep. Now let's look at this AD JPY, the daily time frame, and see. Okay. Okay. Let's see. Is there any levels here? Okay. I think so. Let me draw. Yeah. Okay. It's on it, right? Almost on it. Okay. So I think
Almost. Yeah.
that should be a valid setup anyway. It's still valid. Yeah. Still valid. So let's assume that it's a valid setup, right? Yeah. Look at it, almost there, right? Almost at the peak, at the point of it, right? Yeah. The H4, the breaker is still okay. It's not far away that much. Yeah. And these are source. Boom. Very setup, and that was it. So we move to the downside from here, right? So we'll go to M15. So this move is what? A valid move. And look at it. You can use this, you can use this. Both of them are correct. Because I have to use this, right? Yeah. And this source. Now look at this setup. Number one, price on yesterday's high, berry setup on H4. TDI confidence is what?
Yeah.
Blood or water. Entry as what? LSB plus retest. Good. Very,
retest. Yeah.
yes, valid setup. We are game. So you can see that with this method, you have good trades to what? To set up. Good setups to trade. I just have to click in any of these, right? And it will show me H4, show me M15, price above or below that range. Did you see that? Yeah.
Yeah.
And if it's within the range, like I said, you draw your Fibonacci retracement, right? And you go along with what? The H4 bias and the delta frame bias. Does that make sense? So
yes.
So this stuff will keep showing. It will keep showing for you to see price at yesterday's high or yesterday's low, monthly high, monthly low, weekly high, weekly low, right? It shows you these levels. So it shows you everything outside the range. Once you didn't see it here, it means what? Price is within the range, or price has left as far gone from outside the range. Does that make sense? Once you didn't see it here, it means what? Price is within the range. Just look at it. If you didn't see it here, it means what? Price is within the range. Now look at GBP card. Look at it. It's still within the range, right? Yeah. Look at GP this, right? It's still within the range. So that's why you didn't see it here. Can you see that? Can you see that? Elena?
Yes.
Yeah. So price is within the range. So anyone you didn't see here, it means what? Price is what? Within the range. But if it's outside the range, you will definitely see it. Right? If it's outside the range, look at here now. Price is within the range, right? Yeah. So that's just it. And like I said, if you didn't see it yet, it means price is within the range, or price has far left yesterday's high or yesterday's low. Does that make sense?
Yeah.
Yeah. So that is how I scan the market for my what? Setters. Simple as that. So if it's within the range, you look out for OTE zones at M15. And if it's outside the range, you look out for price at yesterday's high, yesterday's low. Use LSB plus retest, and you take that awesome trade. Right? Now, I've talked about this tip, the take profit as stop loss, right? Right?
Yeah.
Yeah. Like I said, the take profit for the outside the range, you use the high of the breaker source, right? Yeah. You use
the high of the breaker. Okay.
Yeah. As the stop loss, right? What the take profit is what the next low, right? Let me go to AUD, right? Yeah. For a stop loss, I will use here. Let me show you this. For a stop loss, when I'm entering from here like this, I will use that my stop loss, which is what? 8 pips, right? my take profit,
Okay.
I will use this low because if you look at it, price did the retracement from here. Look at this place, right? A flip zone, right? Something like that, right?
Yeah.
Price did the retracement from there. Yeah, and retested it and moved. Or I will use this next low because these are liquidity pools, internal range liquidity pools, right? And external range, right? Within and here, right? Yeah. So these are my take profit level. My stop loss is normally here. Then, like I said, if you're using the OTE zones, right? Your 100 is your what? Is your stop loss, right? Your 100 is your stop loss, right? OTE is your 100 is your stop loss. Yeah. Then if you use trend line break, for instance, like I said, this semaphore becomes your stop loss and your entry is here. Your take profit is normally at this high. Place you have liquidity pools. Yeah, that's good. Those are what? Your stop loss and what? Take profit levels, right?
Okay.
Now, combining H4 and M15, you know, like I've said before, like you must start with daily time frame and H4 daily time frame demand and supply zone. You must anchor H4 breaker and source on daily time frame demand and supply zone, right? To have either bullish or bearish bias. Then if you say bullish bias, you trade price at yesterday's low, right? And you buy from there. The bearish bias, you trade price at yesterday's high, and you sell from there. Then the OTE zones are still what the same, but they have to be within the range. Does that make sense?
Okay.
Yeah, that's it. Yeah, the assignments. Now, I think I've shown you some live example just now, right? So you can do the assignment. So you're going to do outside the range for me, I will do the range. But take note, you must anchor the H4 break and source on daily time frame demand and supplies or other block region. Is that okay? You give me 5 charts outside the range and 5 charts within the range.
5 outside, 5 within. Okay.
Yes, OT zones 5 outside the range. Yesterday's high, today's low 5. So when you submit, they will do the last day zone. Okay.
Okay.
Any question before we close? I think I've come to the end.
Will I get the dashboard for scanning too?
Is that?
That dashboard that you use for the scanning?
Is there? Is among the template? And maybe is there? It's part of the template. You didn't load it very well. If you load it, you will see it then. It's part of the template.
Oh, okay.
Yeah, everything is there. Just load the template.
Okay.
Load everything. You see everything.
Okay.
All right. Thanks, Helena, for the Zoom call. I hope you learned something.
So when we'll meet, we will meet again.
Yes, we'll meet again when you're done with this assignment. When you submit assignment, then we'll meet again. Okay. Yeah. All right.
Okay. Okay.
Take care. See you later, right?
Okay, thank you. See you later.